Hi traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for March the 8th to 12th, 2021. And so I'm coming back to you with another video for this coming week. I took a bit of a break dropping these videos for a time because the volatility was pretty low. There wasn't a lot going on in the markets other than the fact we're just going straight up. Now the markets are sort of gyrating around, we're getting more volatility. There's certainly a lot to talk about, so I'll be dropping more of these videos consistently, as is a lot more volatility and a lot more stuff to talk about. Really good price action out there, and lots of stuff to examine, analyze, and to dissect. So this past week, we saw the markets continue to gyrate in some markets quite wildly as the sort of reflation trade has continued to play out. That is, we've seen the continuation of that rotation out of tech, so out of those high beta tech names and into cyclical / value names. And so this past week we continue to see that trend as tech really took it on the chin, but we saw other parts of the market hold up very well. So the question on everyone's mind, which I'll answer here, is the stock market crashing? Well, in some sectors, yes, you could say, we've seen some really big, big being relative, some fairly good sized corrections, especially in those high beta tech names. But other parts of the market, especially, around the reflationary names, have held up very well. So we'll get to the charts now. And in times like this, it's very important, again, to put your biases and opinions to the side and really pay attention to price. That is, price is going to lead here, as price is doing its thing. That's discovery, and price will be the one that's going to be the sort of the leading indicator ahead of what you're going to see in terms of the headlines. So the price is going to lead first here, especially in these times, and the headlines will catch up afterwards. So lots to talk about. Let's jump into the charts now and see where we came from and potentially where we head from here. So as we always do, let's start with the VIX, and the VIX is doing a really good job sort of explaining the dichotomy between that sort of reflationary trade, i.e. that shift from growth to value / cyclical names. And the VIX is showing you right now that there's a lot of fear in the markets. In fact, that you can claim that the VIX is sometimes a fear indicator, but sometimes it's also a greed indicator. And right now it's sitting pretty flat. So right now, as you see, we've been talking about this VIX chart for a while now, the 3-month VIX chart, we expect this 13-15 area to eventually get taken out because we got that outside-inside on the quarterly charts, and it's slowly making its way. With all the volatility that's been going on, especially with the NASDAQ names, those tech names, the VIX is not showing you anything here other than that, there's a bit of movement inside this quarterly bar, but that's simply intra-bar volatility. If you just kept your eyes on this, you can see the trend is still to the downside, even though some sectors are definitely getting hit. On the monthly chart, firmly inside month. So we still got a Momo down situation on the monthly charts. And that means VIX is still melting to the downside. Not a lot of fear or greed being priced into the VIX charts. On the weekly chart, firmly inside week. This is going to be the question for the VIX was, can you break outside that previous week's range? That's what we were watching last week was, if we see an outside bar and up situation there, that's going to be Momo up with time frame alignment. That's something we wanted to watch out for, and we didn't get it this past week. It stayed firmly inside week, although we did, pop up here. We did not break above any of those significant levels that we talked about last week. Those significant levels were as follows, right? We were watching very closely what it was going to be. Number one, where is it going to trade in relation to the weekly open and the monthly open? Because we got that that fresh week and month this past week. Where was price going to transact in relation to that weekly open? Well, for the most part, the VIX gapped up, so we had that firm green. Well, it's not a green week, but we had it is a green week, but we had a firmly green week, but it cannot really break above the prior week's high. And so this is what we're stuck with here, is that we kind of have mixed time frame alignment, as we talked about many times in these videos. That blue line is your quarterly open, right? So that's something we're watching very carefully, because if you break above that, that would turn into full time frame alignments. Now, the buyers were not able to break above there, although they tried, right? So the SPY, slightly different chart, but this is very illustrative with the VIX, is that, again, we came down here, we gapped down on the Monday, but we quickly popped up, and we had 3 subsequent green days. So green, 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 that's basically an inside bar, up, up. Here is your blue line, your quarterly open. We tagged on Thursday, we pulled back in on Friday. That 1630 area, so that little blue box there, continues to be a spot where sellers are coming in. This has been a level we've watched for a while now, and as I mentioned, back here, once we broke below there, the chance was that this area is going to start turning into resistance, right? So it had been support for a while, going back to December, right? We've initially tapped that area, and it started to act as support here. And now we broke below there, starting back here, second week of February. We've now found that this area has turned into resistance. So every time we come back up here, the buyer's having a really hard time keeping above those levels. Remember, last week we drew in our broadening formation because we had a number of outside bars, and that gave us, right, so we basically connected our extended lines to the peaks of these outside bars, and we're seeing this broadening formation now play out, which is confusing to people, but if you know what you're looking at, you're seeing this actually staying inside that broadening formation. So here, outside bar down, and then Momo down, reversal back up. This past week came back down again, popped up, cannot create a higher high, which is what caused us to create that inside bar on the week. So we're now firmly inside the past week's range, and we got that mixed time frame alignment. So here now, we want to watch for is, this coming week, do we break below this orange line? If we break below that orange line, that means it'll be back to being full time frame alignment to the downside, right? It'll be below the quarterly open, below the monthly open, and certainly again, you're going to start seeing sellers step up once again, and that pivot there will be very, very likely to get taken out, that 1444 area. So let's redraw our line in the sand here, and this is this is what I'll be watching very intently now, is how do you break this past week's inside bar action? That's going to be the level to watch. These, that range there, 1696, 1454 area. Watch that carefully. That's going to give you a very, very good sense of which side of price you want to be on, because if you break above here and it goes outside, inside, and up, then definitely need to pay attention to that, because then you'll be back above that 1630 area. If you start trading above that, then certainly we can come up and take out that area there. If we break below that level, we'll come back down here, and 1350, and again, is not far away. That's certainly within the realm of possibility as well. Because if we take a look on the 2-day chart, on Monday, this is what's going to be playing out. We got an inside bar up and inside bar. So the buyers had their chance. Inside bar up, right? They could not break above the prior week's high, especially on the Thursday, Friday bar. You wrap up firmly inside bar. So there's your stalemate, right? So now all you got to do is take out that low on Monday or Tuesday, whichever day it happens, or, it doesn't matter which day. If you take out that low there, you come back down, boom, that's going to create the outside, inside, and down situation, which would then potentially take us back down to lower lows. Okay, so that's the VIX chart. Very important one to be watching there, as the levels there are very, very clear. They're quarterly open. You got that 1630 area, and now do you flip back and get that full time frame alignment to the downside? So let's talk about SPY now. And SPY finally, did have a lower low this week, but closed fairly neutral. So we still got the inside month on SPY. So that is still firmly inside month on the SPY. This is what we were talking about, right? It's going to be hard for this thing to break down below there, so long as the quarterly open is being defended. And this week, the quarterly open came into play, and they defended that blue line. So they break below there for a short period of time, but then pop back up again. The same thing cannot be said about the Qs. We'll talk about that next. So the SPY, we did get a lower low. So we have 2 consecutive lower lows now on the weekly chart. And if you could break below that quarterly open, which it tried, we just couldn't hold below there, then potentially you get that low taken out here, that outside bar, and then potentially that outside bar there. So that's what we saw on the Qs. But for now, we got sort of a momentum hammer. We got a big hammer here, right? So the buyer certainly stepped up there, and they defended that quarterly open. So we got that mixed time frame alignment now, which is causing a bit of chop, as you cannot break below that quarterly open. But again, you're not above the weekly or monthly open either. But this coming week, let's redraw the ranges. If we get some sort of follow through, a break above this past week's high, we're going back to highs again, because that's simply a very quick reversal that will take things back up there and back up there, back to highs. So the SPY chart holding up remarkably well. So out of all the indices, you know, the shakiest one is tech. That is certainly the one that needs to be watched, as that one there, it doesn't look like the bottom is in yet. We'll have to wait and see. We'll talk about that next though. But for now, you can see the 50-day came back into play on Thursday and Friday. So last week it tagged it for the first time, right? So that was last last Friday, excuse me. We tagged it, we popped up here, and we had a sort of a short covering rally that gave us, you know, one good day of movement here, plus 2.5% roughly. But then the buyers ran out of steam. Look, the inside bar. Once you get that inside bar, that's a stalemate. And then once you broke below that inside bar, they gave away the gains, right? So they gave it away, and they stopped out anyone who tried to pick that bottom last Friday, and they created a lower low, right? So this coming week, that's what you're going to be watching for is, does that 50 period hold, that purple line here? And does that quarterly open hold? For now, it's mixed time frames, so you don't need to be super, you know, bearish here yet until that quarterly open gives way. Then, you know, that's shorting season, right? Well, that's what I'm waiting for these SPY names, is if we can break below and stay below that quarterly open, then I'll flip my bias quite dramatically. But for now, we're sitting here now where I'm not getting aggressive on either side, as you know, we're kind of sitting in this mixed time frame alignment. This you don't have to be too active in. Yeah, there's certainly money to be made because there's a lot of range. You know, we have a minus 1.25% move here on Thursday, and there's a lot of intra bar or intra day volatility on Friday. So it's some good trading in here. Again, if you're not an active trader, there's not a lot to do here now, because this is actually, you know, in the big scheme of things, it's actually chop. Okay, so onto the Qs, because that's where we're seeing most of the carnage. So actually, one more thing on the SPY chart, basically the mirror opposite of VIX, right? There, inside bar down, inside bar. Sellers ran out of juice to the downside. Now we got a stalemate here. You break it back above there, boom, we're taking out the prior week's high, right? Inside bar reversal. I mean, inside bar reversal long. That's what you're waiting for to see here on the SPY. Can you take out this come Monday? Because on Monday, this will be a new week. The new week will open up wherever it opens up, around here or gaps up, whatever, or down here. If you trade above that weekly open, above the monthly open, that's going to be full time from alignment in, and you got to have that bias to the upside. On to the Qs. This is where the carnage has really been, as you've seen. You know, the high tech names, those high beta tech names, really get hammered, and they're really getting on the chin. So here, something to watch: the quarterly chart on the Qs. We're red right now on the Qs, and it's actually full time from alignment to the downside, because there's a red quarter, it was a red month, it was a red week, and so there's a lot of shorting opportunities on tech names. But for now, we have not created a reversal yet on the quarterly chart. So as much carnage as I've seen, you know, to be frank, you know, we're 3 months into the trading year, and Qs are only down minus 1.6%. So even with all the, you know, the selling, is not significant enough yet to perhaps get the Fed really involved in the markets. You know, people are wondering when we're going to see, you know, the Fed put kick in. For now, you know, if the Fed's looking at the markets, they're not looking at the Qs right now. They're looking at the bond market, because the Qs are only down less than 2% on the year. So that's nothing to overreact about. So the economy certainly now is running hot. You know, the jobless claims numbers are coming in fairly strong. So the question now on a lot of people's minds is, you know, when's the Fed? Well, how long can the Fed continue to run the economy this hot? People are trying to, you know, looking for signs of inflation. But right now, you know, we know the Fed is reactive. So until the markets really begin to displace themselves, there's no reason for the Fed to really get involved yet, because we're not seeing massive collateral damage yet in the equities markets. So monthly chart, we did get that Momo up reversal. We had a Momo up situation here, right? Momo up. We finally got the reversal here in March. So that's our, you know, a lower low now created in March, and for this chart to fix itself, so, you know, for this chart to get bullish again, the only way that's going to happen is one of two situations. One, actually maybe three situations, but for this bar to turn bullish, what would have to happen? This bar would have to turn green again and turn into an outside bar, meaning you'd reverse this reversal by taking out that high. So unless that could happen, which would be very difficult, because you have full time frame alignment to the downside right now, this would have to turn to a green bar and take out that high and turn to an outside bar. That's tough. So tricky to try to pick a bottom here with the Qs, knowing that you've already taken out a prior month's low and we still got a lot of month left. So the Qs can certainly see a lot more selling here, because right now, until you can break back above this range again, you're still going to see natural sellers step in here as we've had a reversal on that monthly chart. So I would not be quick to try to pick bottoms on tech names, because that monthly chart has been damaged. In order to fix this reversal, you either got to do one of two things, as I said already. One, you turn this thing to an outside bar. Two, you wait till next month to take out that bar's high. Or three, you turn this into some sort of strong momentum hammer bar, turns into a big hammer. And then next month, once again, you take out this month's high, and that creates a reversal that can then potentially go back to all-time highs. But that, those are your three scenarios. And right now, the price, if you pay attention, you're below last month's range. So you got to honor that and maintain your bias to the short side until that chart can get repaired. On the weekly chart, continuation of that Momo down move, right? So Momo down, that's Momo down, full time frame alignment to the downside. We'd be looking for more shorting opportunities so long as we have that full time frame alignment to the downside. All right, so here's something interesting. So why did the markets bounce on Friday? Well, hard to say one particular reason, but definitely the shorts may have overextended themselves a bit here. As we said last week, we had the same thing where shorts may have overextended themselves. We got that quick bounce on Monday, Tuesday, and then the sellers came back in again. We may have seen the same thing here as on the daily chart. As you can see, we had that bit of a pop on Monday, right? So we had a gap up on Monday. They squeezed them until Tuesday. They reversed, they basically got a higher high, but then faded it, and then we had that continuation down on Friday, Thursday, Friday, and Wednesday, Thursday, Friday. But one ETF that everyone's watching, a lot of people are watching, is the ARKK, or Cathie Wood's Innovation ETF, and this one has been hammered. So this would be a proxy for those kind of sort of high beta tech names like the Teslas of the world, and this thing has been hammered. So from the peak to the trough, I think we've had a correction type move that's over 20%. So the peak here to the trough, we had, yes, a 33% drawdown. Now, not that far down anymore. On Friday, we had a huge hammer set in there. So we are now trading. So based on what we closed right there. It's a close to minus 27% move on that ARKK ETF. And what's significant about that this particular chart here, so we basically found buyers step in right on that black line right there. What's that black line? That's the 200-day moving average, right? So this thing is Momo down still, so Momo down, but the buyer stepped up and bought that 200-day right to the tick there, and you can see the amount of volume that transacted. That's the most volume on that ARKK ETF, I think, since its inception. So really, we had a lot of volume step in there. There's a lot of people playing that ETF to get maybe more beta onto the short side. So it's been a really good trade for those folks who are willing to trade that ETF. Now, again, did they get a little bit extended? You are extended now from those traditional moving averages. So how far can this thing go? We break above there, you may see some short covering as folks, may have made some good money on the downside. They may not want to see their their profits evaporate, and they may take some profits off that. We may see some short covering if we break above there on Monday or this coming week sometime. Okay, so there's your ARK ETF. Again, very interesting one to watch, and especially off that 200-day moving average bounce. Let's talk about Dow. So the Dow holding very strong as well. Firmly inside month right now, so it's certainly not threatening looking whatsoever. The Dow names, again, mostly a lot of those Dow names in the Dow index, very, very cyclical names, industrials and so forth. So firm inside month. And on the weekly side, we get a big green hammer. So this is very bullish, you could say, because you have. This is the example of what I gave you on the Qs, right? So how do you fix a bar that breaks the prior bar's low? You do something like this. You create a green candle, and then the following week, if you break above this high, that'll be a Momo down, reversal back to the upside, and all you gotta do is come off that pivot and we're back to all-time highs on the Dow. We are sitting though right at that broad information extended line here. And so question is, if you break back above there again, we may see more range expansion if it can stay above this trend line. Right, so watching for that. That's setting up very, very nicely now for continuation to the upside for Dow names. Okay, so we also saw on the Dow on the daily charts, we did get that bounce off the 50, like we saw on the SPY. We got a pretty strong bounce. We didn't get the test of it last week, but with this week we saw it on Thursday. They tested the 50, they broke below, they tested the quarterly open, and boom, they popped it back up again. So the buyers are definitely holding price above that quarterly opening level, and we may get that again. If you break above that purple line there, you can see that potential Momo down reversal long trade back to the upside. All right, so like we saw with the SPY, there is the inside bar down reversal starting to work already. All right, it's already kicked off on Friday by taking out that high. You break, if this continues, get back above there, because that's a Momo down. See, that's Momo down. You broke above there, that Momo down got extinguished. So now this inside bar reversal pattern is playing out. So long as that low doesn't get taken out, this thing can work its way back up again, back to those all-time highs. Russell, there we go. Red month right now, but firmly inside month. Okay, so firm inside month right now. No lower low yet. So watching to see if and when this range can break. All right, so watching that level, or those levels. On the weekly chart, bit of a hammer, not as strong as the Dow, but we had a lower low. But look, they defended and brought it back into the prior week's range. So that's what you want to see as a buyer or as a bull. You don't want to see that thing break below there and stay below there. So right now the buyer stepped up, but because we have that weekly, monthly open above it, you're firmly red, and you have that mixed time frame alignment. All right, which means you're definitely going to see buyers at least try their hand at bottom picking until you get that quarterly open negated, right? So you get a trade below there to see those natural sellers on that quarterly chart. But for now, red month, red week, green quarter, mixed time frame alignment. We did break below the Bollinger Bands here, and you can see the buyer stepped up. There's your again 50-day moving average. That's your first test of the 50 on the Russell since when? Look, you have to go back a ways. Look, that's the purple line. We'll extend it all the way back here. When did we touch it? We haven't touched it since we broke above it way back in October of 2020, right? So we had that break above the 50. So that was, sorry, that's not true. Initially it broke above, well, actually we've had it way back here. Yeah. We've had a bit of choppy action here, but of course we bottomed back in March, and then we had a really good run there. And since we broke back above it here in November, that's the first tap. So that's your first tap. Again, with that green quarter, expecting buyers to try to at least bottom pick this until that fails, right? So right now the buyers, they have been rewarded every time they try to buy, and this may again turn into one of those buyable pullbacks. You got to break below that quarterly open to really, really get things potentially ugly. I think it's gonna be tough to do this quarter. So I think the first chance the sellers are really gonna get to maybe to get a second look at really turning this quarter red is probably at the end of March, right? So as we enter into Q2, that's what we need to watch for. So we still got a few weeks to go from here. For now, it looks like we're going to remain above that quarterly open unless something dramatic happens over the course of the next few weeks. Let's talk about that 2-day chart, because that one's been pretty illustrative as well. And recall last week I said, okay, this is going to be interesting to watch and see how this one plays out. The double inside bar, because we know how to play that. Sorry, that double outside bar, because we understand the mechanics of what's going on there. If you don't know, refer to last week's video. We talk about that double inside bar and how that can play out. Well, this is the best case scenario, because look what happened. Monday, Tuesday, we create an inside bar. It gets very, very clean at that point, right? So we know exactly how to trade that pattern. Double outside, inside, we can now expect volatility. We know volatility is going to show up here because of the double outside, prior to it, and there's your resolution. Once you break below the inside bars low, boom, and you get that continuation for I think 3 days until they pop up on Friday, end of Thursday, beginning of Friday, right? We talked about that already. It pops up. So you did have a good move to the downside there, with some good time from alignment, right? The weekly and the monthly were red. Just not going to expect it to fall completely apart until that quarterly open can change red. So now, watch to see how this one plays out. But looks like the buyers did step up here now, watching just like we did with the Dow and the SPY. Can we get a higher high on that weekly chart? I'm going to redraw the weekly chart here now, because the ranges that we're going to watch are this week's high and this week's low. There you go. Talk about TSX. So here's the Canadian stock market, and with all the cyclical names, especially oil names in the oil heavy Toronto Stock Exchange, this thing's holding up very, very well, right? So the volatility that we're seeing in the tech names, you're not seeing it here on the TSX side because there's so many oil names and cyclical names. So here, firmly inside month, no lower low yet, right? You got a lot of work to do to take out February's low. So that would be the level there, 17,487 and change. Firm inside month right now, right? And look at this weekly chart, inside week. So a lot of nothing burger on the TSX index, not a lot going on there, but a potential Momo down inside bar, reversal to the upside. We break above this past week's high, we're going higher, maybe back to those all-time highs on the TSX. So we're actually not that far away now. This here, because of that inside bar, all right, that's nothing burger stuff, right? So that day there is minus 1%, negated the next day with a 1.4% move to the upside. And we know it's inside bar action. So all you gotta see next week is a break above there, and we're back to all-time highs very quickly on the TSX. Emerging markets. If you recall last week, I said this is the one that people have not been talking about that much, but I think bears watching because we did get that monthly reversal. Already, and it was very, very weak to close out February. So the question was, what's going on there, emerging markets, something to watch for. So we do get that break below the prior month's range, but it did pop up. So you're back into the prior month's range now, and it's slowly turning to a hammer, right? So that's what you want to watch for is, can you trade back below the monthly prior month's level? Otherwise, that means the buyers are stepping up. And so here, it's you can kind of see you're basically sitting inside of this large bar, right? So this big outside bar, you're kind of still inside that range. So the buyers stepped up here and defended so that it's not breaking below that quarterly open right there, all right? So this is still, like we saw the majority of the indices in the US, mixed time frame alignment. That's kind of the story of the week, right? Mixed time frame alignment, where if you thought things were really going to break down, the question that you have to watch for, why isn't it breaking down further? Well, because people are honoring that green quarterly open, and it's not turning red. And so prices, kind of telling you that until that level breaks down, that's what you want to watch for something significant. And you don't have to call tops, right? I've been saying this for a while, and I hope you take it to heart. But yes, there's some good trading to happen by calling tops. But the reality is that if you look back on market cycles, the really big down moves happen when there's full time frame alignment. That's by definition what needs to happen. Big down moves will happen when all the time frames are red, right? It's very hard to have a big down move when there's still a green quarter, by definition, right? By definition, it won't be a big down move if the quarter's still green. So that's what we're looking for. Now, can there be sharp moves to the downside with a green quarter? Absolutely. But if you really want to look for protracted or long moving trends to the downside, a trending market works when you have full time frame alignment, both to the upside and to the downside, which is so important. Why we watch that. Now, if you're more of an intraday trader, the same principles apply here. You're not necessarily looking at the quarterly levels as much because that's not going to be as relevant intraday. So if you're more of an active trader, intraday trader, then it's going to be looking at those wider time frames, right? Is it a green day? Is it a green hour, right? These are time frames you want to be looking for to make sure that you're on the right side of price to see trending markets and have those trades that run for a period of time. Okay, so there's your emerging markets chart. We're looking for this point here is, do we have that Momo down? No, so that's, so right now, we're just watching to see here now on the daily chart here. We had that Momo down move. Okay, so Momo down on emerging markets. If you break above here, okay, that'll be a Momo down reversal back to the upside again. However, you got that 50 period. This thing did break below the 50 period, and it's not breaking above right now. So we want to see, once again, where does price transact in relation to this monthly open, that quarterly open, and where it opens in the week. If you still get stuck in this range, that's Chop City, and that's what you want to be watching for and avoiding if you're trying to find trades that actually run for a distance. If you get this is going to be Chop City. You have to just have the right expectations set so that you're quicker on the draw. So both in and out, as you're not expecting things to move for a distance when you have that time frame misalignment. On the TLT, this has been the big story, right? So the bonds have been the thing that have been leading the markets, and all eyes are on both the long bond and the short bond. So if you're looking at the long bond, a very good proxy is the TLT. So you got inside TLT, you have 20-year plus bonds in there. And if you're looking for shorter term bonds, like the 7-year, then look at IEF. So you got a 7-10-year bond here. An IEF is a good one to watch if you want to see what price is doing on the shorter time frames, or the shorter duration bonds. So first, the TLT. This thing has been moving quite a bit relative to itself. Usually TLT is kind of a slow mover, but this past, the last past months, things have really picked up, which is been concerning, because as I said in last month's video, bonds should not be trading with lots of volatility. That's where people typically go for not as much action, right? So most portfolios use either a 70-30 split or a 60-40 split, and you do not want your bond portfolio acting volatile, because that's where people will usually put their money for safety. So right now the bonds have been very, very volatile, and it's really picked up the last few months, because we've been on top of this trade for a while now. We'd identified this inside bar reversal short back on the quarterly chart, and this thing finally picked up steam this past quarter. It's down 12% for Q1. Looks like it's going to take out that level there, low of 135.91. Did it get close? 136.61. So potentially more room. That pivot there and that pivot there. So I don't think the bond. I don't know if the bottom's in on this one yet. There's no. There's no. It's trading full time for alignment to the downside. There is no level yet that it's bounced off that's significant. Would expect this to come down a little further to stop out more people. That's just simply price discovery, right? This month right now, it's still inside month. So it's stuck inside the prior month's huge range here, and so it's stuck in there for now. Now on the weekly chart, even with all that activity, inside week. Remember, so the prior week's range was so wide that this week it left us with an inside week. So with a lot of market gyrations here, but not a lot of movement. Got the inside week on the TLT product, and what I'd be watching for here is this 2-day chart, potential inside bar reversal setting up there, outside inside and down. It doesn't go very far. Now we've got a bit of a stalemate to end the last 2 sessions. You break above there, you got to clear that level before you can go any higher. But the trend is clearly down, right? Clearly down. You got to keep that bias to the downside on bonds, and that means if it's full time from alignment to the downside on bonds, this means that the Qs is still not out of the woods yet, as people are still getting out of those growth plays. Okay, so potential here for a reversal, or again, if sellers really step up here and they break below that low, we got a full time from alignment to the downside continuation move for the bonds. So it's inside week right now. Just redraw these levels. So again, boom, boom. Let me just maximize that. Which way is this break? All right, and we're doing the Bollinger Band walk to the downside now. So that's very clear. It's a Bollinger Band walk to the downside. But if you break above this bar's high, you might get a short correction that will cause some shorts or pullback for some shorts to have to cover their positions, because they've been very profitable to the downside here on this inside bar reversal short, right? We talked about that already last week. But if you pop up a bit, anyone who's a little bit trigger happy and does not want to see their profits evaporate will cover their shorts, and you might get a short-lived bounce, but the trend is to the downside, right? So monthly open, watch that. You break above there, you're going to have that time frame misalignment once again. Expect some more chop there. You might well, again, if it pops up above here this next week and you're trading in this area, right? What's going to happen there is that you're going to get stuck with an inside month, because it's already inside month. So the question is, if all of a sudden you cannot take the lows out, and you cannot, you're really far from taking out Feb's highs, you're going to firm inside month price action like this, and it's going to turn into basically an inside, it's going to stay inside month like this, like an inside bar like that. Although it could be a bigger inside bar, but you're going to probably be an inside bar in the month of March if you cannot take out that low. And that all begins here. That all begins this coming week. Can you take out this high, or you take out that low and we see a continued momentum to the downside? So there's your TLT. So 2 more things and we'll wrap things up. First is gold, MGC. Gold a small bounce this past week, but nothing to write home about. Gold has not been playing out as expected. If you thought that gold was a proxy for inflation, and you think inflation it has been going up, gold has not been showing that. And in fact, gold has been very, very weak because it really broke down. It broke that quarterly chart that we've been highlighting for a while now. We talked about this Momo up move that started back here in April 2019. It finally reversed this past quarter, right? So you got an inside bar down now, and unless it can pop back into last quarter's range, the downside, the bias is to the downside on the gold product. Okay, so downside to the gold, inside bar reversal short that happened here in February, still continuation this week. You got another lower low, so we didn't get a big range here. It's minus 1.75%, but now the trend is to the downside on MGC, gold micro futures. Our micro gold futures, and we still got that Momo down. Although we do have a small green day on Friday, it's still Momo down. Even if you get a pop up here, you get a Momo down reversal, you got time frame aligned to the downside. So the bias has to be short here. Any pops to the upside probably need to be sold into. Before I move on to that, I did forget to say that the bond, the 7-year bond, IEF. 7-10-year bond ETF, we did get that red dog reversal, right? So we did see that red dog reversal happen here on Friday. So we might get a bit of again short covering if we go inside. Momo down, you break above Friday's high, okay, and you might go after this pivot here, but you're still going to be a red month, a red quarter. You might get a green week though if this happens. Once again, that's going to basically give us our inside month. Well, actually, you don't have an inside month on IEF. We did get a lower low, but that would definitely cause us to go probably inside week until this high can get taken out. So let me just draw the high in for IEF. There it is. We'll turn that one red to indicate that's a weekly level. Okay. And there is our red. All right, our red area of resistance, not resistance, but our red area of highs and lows. So there we go. Let's see how that plays out, or do we stay inside week this coming week? One final product, that's BTC, which is looking more and more like, I've been seeing it for a while now, more and more like digital gold. It's certainly been an asset class that people have begun to take, the digital gold as a serious, as a serious potential store of value. There's a lot of volatility. It's becoming an attractive store of value for folks who do not want to hold physical gold. So here you go, BTC firmly inside month. We had that that 58,000 level tagged in February, inside month right now. Even with that pullback we saw this past week or two, it's still inside month, right? You got to take out this low here, 32,333, in order to create the reversal on the BTC chart, and you still got a green quarter. So you got a lot of work to do if you're a seller to try to reverse this thing. Now, are there short trades available? Absolutely. There's definitely short trades available if you want to be faster on the gun, if you don't mind trading with mixed time frame alignment and you're more active. But if you're sort of a person who wants to trade with the trend is still up. Okay, trend is still up. Inside week right now. So firm inside week. This is kind of what we talked about last week. You got a really big week the prior week. It was down 21%, right? So that's a bit scary, but if you've traded in the crypto space for a while, that's actually par for the course. So if you're new to cryptos, that's something, you probably got scared out a bit there. But for anyone who's been trading cryptos, for a while, and I've been trading since 2017. I started trading cryptos actively. Before that, I bought my first crypto in 20. Let's see, where did I buy my first tranche of Bitcoin? Yeah, here. I bought it around here. It's around the $200 area back in 2015. And these 20% moves are fairly negligible. You have to get comfortable with that volatility if you're going to trade cryptos. And we have a firm inside week now. So it's redraw. I know the week isn't quite done yet. We actually still have 1 day left at the time of this recording, which I'm recording this on Saturday, Eastern Standard Time. And it's going to probably be an inside week, right? Unless something catastrophic happens to the upside or downside on Saturday afternoon, Sunday day. probably going to be inside week on BTC. So the question is, how do you break that range on this coming week, right? If you break it to the upside, boom, you're going to get back those all-time highs very, very quickly on BTC, because BTC right now basically consolidating. This is basically a nothing burger type of week. Outside bar up, that was a Momo up move, got extinguished to the downside here, but now you got inside week again here, but you got that time from alignment to the upside. So still green quarter, still green week, still green month. Hard to short Bitcoin at this area. Would expect buyers to step up again, even if you pull it back down again until that quarter turns red. So still a buyer's market here, with a lot of bulls probably still waiting for price to go lower so they can pick up some Bitcoin. Just my sentiment anyway, it's my sense of things. There's still a lot of buyers out there who want to get in at cheaper prices if they can. All right, well, that's our wrap for the week. Man, lots of, there was a lot of stuff going on this week, and I don't want to belabor things, so I'll try to keep it as short as I can. So if you appreciate these videos, then definitely give me a thumbs up on YouTube. Any questions, as always, feel free to drop them in the comment section on YouTube, or head over to the blog at thetradingench.org, and I look forward to seeing your feedback, questions, or any comments for that matter. As always, it's some volatile times out there, depending which asset you're trading, what stocks you're trading. So be safe. There's still earnings out there. Still a lot of econ news that's floating out. So be safe on the trading front. Be safe on the COVID front, and I look forward to talking to you again next week or very, very soon. All right. Have yourself a great trading week and happy trading. All the best.